モデレーターは楽天株式会社
The session is moderated by Mr. Oscar
オスカー・リュウ様にお願いします。
Riel, Managing Partner, Rakuten Fintech Fund and Executive Officer of Rakuten Inc.
パネリストは
Panelists include
マイケル・レイブン様、
Mr. Mike Levin, CEO, Currency Cloud,
続きまして Deal Capital ポートフォリオ
Mr. Matt Danzisen, Portfolio Manager, Teal Capital, Mr. Christo Carmen, CEO, Transferwise, and Mr. James Gutierrez, CEO and co-founder, Insight. Thank you for coming. Oscar, the floor is yours.
Hello, good morning, everyone. Very excited to be here for our panel, Fintech in a Changing World. The topic of today's panel, we're going to be talking about changes in Fintech, or supposed changes in Fintech, which stands for financial technology. That is all the financial services that are actually delivered online in light of the recent political changes, such as Brexit in the United Kingdom, the election of Donald Trump in America, and also the upcoming election in France, and the potential rise to power of a right-wing government. So today we have a great lineup of entrepreneurs and investors coming from Europe and from the United States. And the way we are going to run this session is each one of our guests will deliver a short presentation about what exactly they do, their business. And then we will conduct our discussion. And finally, we will leave a few minutes for Q&A. So please prepare your questions for our guests. So I'm going to ask everyone to sit down, and I'm going to give you Mike Levin, CEO of the Currency Cloud, an innovative digital payments platform operating out of the UK. Thank you.
So hi, I'm Mike Levin, the CEO of the Currency Cloud. Just a slight bit of background on me. I live in London. I've been back and forth from Silicon Valley to London over 25 years in financial technology, deep technology. And if you look at some of the cards, you'll see I worked in the UN, in Asia, in Thailand, in the Philippines, in India, and Bangladesh. So I have a pretty long career in financial technology and a lot of experience in all of those places all around the world. At the Currency Cloud, what our business is serving the global digital economy. So by that, I mean all of the various kinds of firms that are transformational on a B2B basis. And what we do is we help them globalize. We do that via APIs. In other words, our customers are primarily the developers inside digital firms, and a very emphasis on firms that are Series A. So we sell into Series A firms that have a different way of looking at the world and help them to globalize their business through their financial flows. The way it works is we have a series of APIs that help people convert money, to manage funds, and to pay them on a global basis. We power a whole series of digital innovators. My favorite current example is a firm that puts a small box in every truck that goes throughout Europe so that it pays tolls and pays for fuel. And if that truck goes from Germany to Hungary to Denmark to the UK, it's incurring expenses in 4 different currencies, all of which need to be billed to the toll authority and paid back by the trucking company. Very innovative solution that involves digital cards, involves small boxes, and involves trucks. Other firms that do Internet of Things, a lot of small and medium-sized regional banks that want to avoid the world's banking network. So it's all about digital innovators on a B2B basis, and we really sell anywhere where business crosses borders. Size of the company, we do about $10 billion will flow through us. There's about 250 customers, and behind them, there's 1 to 2 million small businesses and individuals who use the system. And every month, we now do about 200 to 250,000 payments. So that's the size of the company, and thank you very much. I'm quite happy to be here.
Thanks, Mike. And next will be Matt Danzeisen from Teal Capital, a lead investor in the fintech world. Matt.
Okay. Hey, nice to meet everybody. Thanks for having me. Japan's one of my favorite places to visit, so always looking for an excuse to come out here. So thank you, Oscar, for the invitation. I work for Teal Capital. It is, next slide, this is the boss. It is Peter Thiel's family office. So Peter runs a few venture funds and then also does private investments. Here on this slide, excuse the multitude of text, but we invest in a lot of companies. There's pretty much every sector in technology, but Peter's background, he started PayPal, as you might know, and we've had a lot of deal flow and a lot of interest because we pretty much understand the financial services space better than we think almost anybody in Silicon Valley. This is kind of a timeline of investments. Hopefully you guys can read it. It's a little blurry here. But basically started investing pretty much as soon as Peter sold PayPal to eBay in 2002. And it's kind of continued to go on from there. These are some investments that myself and my team have done. So I focus on the financial services space. What that means is we've done a lot of lending companies and also some other basically associated and payment companies as opportunities present itself. Most of these companies are US and Europe, and we continue to look for interesting companies and interesting structures. One of the things about being part of the family office is we're able to do hybrid structures, so debt, equity, and things that a traditional venture capitalist can't do. So we've been able to do some pretty neat things with that. This is just a map to kind of show you the networks we have. On the lower corner, it's basically the people that worked at PayPal originally and some of the cross investments they've had in different companies. It's pretty substantial, and they've basically all been pretty close throughout their careers. And it actually presents a lot of opportunities and a lot of opportunity for companies to work with each other. Real quick, these are some of kind of the headline investments that Peter's done, both out of the family office and then also part of venture funds. Actually, one of the largest investments is Palantir, which crosses over a lot of different industries. Stripe, as well, is pretty relevant to this conversation. It's one of the largest payments providers, basically credit card interchange. Here's a few other funds that we've invested in and a lot of very leading companies in Silicon Valley. And that's about it.
Matt, thank you very much. Next, I'm going to give you Carmen, CEO of Transferwise, one of the leading players in international remittances. Christo.
Thank you, and really glad to be here. So I'll quickly explain what we do. We help people and businesses move currency between one country and another. And then we do those funny things we call stunts. Actually, we had just yesterday a big alarm clock in Toronto, waking up the bankers because the time has moved on from the fax machine. So what we do now is we move about $1.3 billion every month. We've expanded into 9 countries. That's including Tokyo. We have a small office here. We're hiring more people. And the number that I'm most proud of is that we save about $1 million every day to our users compared to using their banks. But let me tell you who are the users generally. In fact, the users are everyone who moves money between countries. So who are they? They're expats like me. So I moved from a small country to the UK to work, and I had this embarrassing problem when I found out that my bank has secretly been taken about 5% of my money that I sent back to my savings account in Estonia. And the way they do this is they put it in the small exchange rate. They give you the exchange rate that's not the real exchange rate, but it's the real exchange rate plus a little margin. And I realized that I lost a few £1,000s in the process of sending money back to my savings account. But unfortunately, I had a solution. So I had a friend who had moving money in the opposite direction. And what we started doing was, quite reasonable. So I just put money in UK into my friend's account. We calculate the right amount of euros for those pounds, and he puts the money on my account in Estonia. And in this process, we both saved quite a bit of money for each other. And then we realized that this same thing actually can work for not just two of us, but much more people. So now we don't really consider ourselves a UK company or a European company even. We consider ourselves a kind of world company. We're licensed in 12 different countries, in 12 different jurisdictions, and our users are as much Japanese as Germans, as Indians, as people in the US. And the reason why people find Transferwise is just purely because it's about it saves them about 5 times what they would use with a bank. That's it. And looking forward to your questions later on.
Fantastic, Christo. Thanks very much. And last but not least, I'm going to give you James Enrique Gutierrez, CEO of Insect, one of the leading lending platforms in North America. James.
皆様、おはようございます。本日は読んでくださってどうもありがとうございます。とても嬉しいです。Now I'm going to switch to English. My name is James Gutierrez, CEO of Insect. Tell you a little bit about what we do. So our mission is to help hardworking people in America build credit, build wealth in advance in the United States. There's about 138 million people that are living paycheck to paycheck. They have poor credit scores, or they don't have credit scores in the US, but many of them are in fact very credit worthy. So our mission is how do we help these people build a credit score, which in the US, if you have an idea for a small business and you want to get a small business loan from a bank, they're going to look at your personal credit. If you want to buy a home and you need a mortgage, they're going to look at your personal credit score. So what happens if you don't have a credit score? You really don't have an opportunity to build wealth in the United States. And so we want to solve that problem and help these people. Unfortunately, for people who don't have credit, it's very costly. There's not a lot of good options. We have something in the US called payday loans, which I'm sure here in Japan, you would be very surprised that the interest rates are, up from 400 to 800% per annum. And so what we're trying to do is compete and take those guys out of the market by providing a better option. Our average loan is $1,000 unsecured loan for 12 months, very small, to people making $27,000 a year of income. But really, we've designed a product that's transparent, it's very simple, easy to understand, and that our borrowers can make payments every 2 weeks when they get their paycheck. And ultimately, our mission is to help people build a credit score. So if you go from no credit, after 3 loans with us, we can help you build to a 660 FICO score, which in the US ends up changing your life in terms of the kind of access you have to mainstream financial products. But the big question we faced with was how do we reach these customers? A lot of our customers are underbanked. They're primarily operating in the cash economy. They don't deposit their paychecks in a bank. They keep them in cash. So we wanted to build trust relationships is what matters for these customers. How do you build? They want a face-to-face that they can go to. So in the old way, this is where I started my career. I started a company called Opportune. These were some of our first branches. And the old way, we used to lend face-to-face, and that's a picture of me just a couple of years ago when I started my career. And this is, being in the community, the old kind of community lending model. It worked well, but in building that business, we faced a lot of cost. It was hard to scale because we had this huge store network. So our question was, how do we make offline work more like SaaS or online? And we introduced something called lending as a service. So what we do is we help leading brands who already have customers, already have storefronts, offer loans to those customers. So we power their lending through a white label solution that does everything from credit underwriting to servicing to funding loans. And we believe that the future is that brands, so major consumer brands, will be the lenders of tomorrow, not banks. So what this means today is Face-to-Face 2.0. This is a picture of one of our partners, one of their storefronts. You can apply for a loan through a tablet application that we built. And so in terms of our result, we've seen tremendous growth. We're now in over 430 stores. We expect to hit 1,000 stores in the next year or two. We processed about 130,000 applications for credit in just 2 years and growing rapidly. So thank you all for having me. Domo arigatou gozaimasu.
James, thanks very much. So we're going to start our discussion, but to set the tone, apart from getting the individual presentations, what I wanted to show the audience is effectively what has happened in fintech over the last year, effectively what the big trends have been. What we see is that, number one, in 2016, investments in fintech didn't grow. So effectively, the funding for the sector was flat over the prior year. And the question for the panel is going to be whether precisely these geopolitical events have had any type of effect. Also, what we've seen is that despite of that, fintech as a percentage of overall venture investments continues to be very important, with about a 23% share as of the last quarter. And also, when we look at the important companies, what we see is that there's a huge concentration of investments in Asia, and that most of those companies are in China. Also, there haven't been that many exits in fintech in 2016, basically with some M&A activity, but not of very large size, and just a few IPOs. And also, we see there is concentration, or there continues to be concentration, precisely in the space of lending and in payments. Payments companies such as Currency Cloud, Transferwise, or lending such as Insect. And finally, there are some unicorns in fintech, but again, most of them are actually in China, and those are the companies that are marked in green. So, having looked at this, I guess our first question for the panel is, do you believe that the current political changes will have an impact on the fintech space, particularly given the dependence on regulations and liberalization? And I guess I'm going to ask Mike to kick it off. Thank you.
So, global integration. So our customers are businesses. So I'll speak at it from a business-to-business perspective. Global supply chains are extremely well established. And so sourcing, take my truck example. So supply chains on a global basis are well established. Information integration, in other words, the global nature of the internet, is totally well established. And also the movement of people has been going on for a century, that live in different countries and communicate with each other. So the basis of globalization remains to be there, which means the need to move people and money across borders won't recede. There may be some obstacles in terms of whether it's Brexit or nationalization, but those may work in two directions. At the same time that regulations may liberalize, borders may go up. So my feeling is that the current environment will not have a massive change in terms of what we see. That what powers our business, which is the power of trade, people, and information, moving continually around the globe, isn't about to slow down at any particular time. There may be some roadblocks, some speed bumps that are put in the way of it, but I don't see it actually changing dramatically.
Thanks, Mike. Any opposing views about what Mike has just said?
Bit of a follow-on. From the investor standpoint, in 2008, basically everybody hated banks, and all these politicians got thrown out of office. The new politicians that came in also hated banks and were eager to regulate. That actually created a lot of opportunity for fintech companies to to rise up. And as they started getting bigger, those same politicians, especially in the US, were still in power, and the regulation was kind of looming on the horizon. What we're seeing now with the change that's going on is actually people backing away from that regulation and allowing some of these fintech companies to grow a little bit more. So I'd say I'm pretty positive that things are headed in the right direction, but it's still a bit of an unknown right now.
Thanks. And I guess, like Christo, I believe you guys are probably domiciled in the UK. I don't know if that's a factor or not. Like, how do you see, I guess, like Brexit affecting you, if at all?
Thank you. Brexit, I must admit, it came as a surprise for me, and I think for all of us, it's a negative outcome, definitely. However, from the business and volumes perspective, that the week before Brexit and after Brexit have been twice as big as any other week for Transferwise. What we find is in those, in the time of global turmoil, people actually move money more, at least in the short term. However, I do have to agree with Mike here that, at least I want to agree with Mike in the sense that in the short term, both Trump administration and the movements happening in Europe are rather driving or looking like they're going towards isolation, but I don't think it's realistic. I do believe that as the world moves on to the future, businesses are getting more global. Internet is driving businesses to be more global. We consider ourselves a world company, not a UK company as such. We are domiciled there. And as our mission is, those currencies that the world has somehow created currencies, every country needs to have their own. And it's very useful for macroeconomic perspective, for countries to be independent. For people in this audience, currencies are a nuisance. For a UX perspective, in technical term, from the user experience perspective, the fact that we need different currencies for different countries, it's a UX nightmare. So what we're trying to do is we're trying to move the friction that happens in trade, as Mike.
James?
Sure, yeah. I think the changes are quite material that we're going to see. So basically in the US, there was a feeling that the banks caused all the problems, so that we should over-regulate the banks. And what happened is now there's a feeling that by having done that, we went too far, that the banks stopped lending effectively and capital was less available, whether it's small business, mortgage, small loans, however you want to define it. So I give you some specific examples of things that are already in motion. In our world, in consumer lending, in the US, in the lending space, the regulation in 2008 or 2010 created a consumer watchdog called the Consumer Financial Protection Bureau. So it's kind of like the Environmental Protection Agency for environmental concerns, but now there's a body to make sure that consumers were not getting ripped off by some bank offering, for example. This current administration, the Trump administration, has said that they want to abolish this agency, and they don't understand why the agency should exist. So an example of small lending, this agency had just been at the verge of passing a new rule that would have required all lending in the US for small loans to verify someone's income and to evaluate, looking at income and expenses, whether someone can afford to repay a loan. So you think these underwriting standards we should have them. So in general, it's a good idea. But the impact of that would have, for example, decimated payday lending in the US to the tune of 93% would have been destroyed. So that's a pretty significant rule, and the Trump administration is likely going to put a stop to that rule and roll it back. The second example is that in the prepaid space, where you have prepaid cards for a lot of underbanked people, the CFPB had passed some rules around prepaid that were detrimental to the industry, that now Congress is passing a law to roll back that rule. And finally, in the telecom industry, so we, as doing lending as a service, we partner with companies. We like to work with companies that have data on their customers and try to use that data for credit underwriting. So we've had some conversations with some telecom companies. What are all the things you do on your phone? Can we use that information to understand if you're going to be a good borrower or if you're not going to be a good borrower? We were running up against a lot of privacy policy issues that were a result of the Obama administration. The US Senate and Congress just passed a law rolling back all of these concerns around privacy policy as it pertains to telecom data. This is huge. So for us, it actually opens up a very big opportunity in partnering with telecom. So those are just a few examples. And then lastly, in the M&A world, Ant Financial had made a bid to buy MoneyGram, which is a large money transfer business in the US. And that has now risen to the level of the Trump administration saying, well, is this China trying to come into the US market with a lot of sensitive information about consumers and where payments are flowing? Is that a nationalistic benefit? Do we want that? Do we not want that? And it seems that the new administration is pushing back on that merger, and now there's a competing bid. And what they're saying is, hey, our bid is better because we're not going to be selling the company to Alibaba. So those are a few examples, I think, where it's going to be very material changes coming with the new administration.
Wonderful, and I think actually that's a great leeway to our next question. It seems that we've seen that even though that there is some short-term uncertainty, our panelists appear to be very bullish about the potential for the sector, and there is some positive deregulation that might benefit fintech startups, particularly in a space that tends to be fairly regulated, specifically to protect consumers and because we are dealing with money. And yet, at the international level, there might be some trade barriers, such as James was mentioning, with an intervention or a potential blockage of an international acquisition. So the question to the panel is, do you believe that innovation or technological innovation can actually help circumvent any such interventionistic or trade barriers?
It's a bit of a hard question to answer. It was a lot of times companies, when they're small, they tend to operate under the radar and are able to do things that people might not be comfortable with, but they're at least an unknown and are willing to try. And once they get bigger and capture the attention, we're an investor in Airbnb, for example. So when it was small, it was something that was kind of fun and spreading fast. And when it became larger, existing industries like hotels and other things started getting concerned about the effects of it, and regulations seemed to follow. Innovation always seems to drive, and we believe it follows what consumers want, and especially what consumers want if they're not able to get it right now. I think with money, there's certainly a lot of barriers that governments and industries and entrenched interests have erected over the world. And it's kind of like water behind a dam in a way, and eventually will find its way out. We've been hearing about Bitcoin, for example, for a while, and I think everybody in at least the fintech world has been excited about it, but we're still at this stage, I think, where we're just excited and we haven't really seen its full potential live up. So something like Bitcoin, it promises to deliver free payments and a lot more efficiencies to the world, and it just isn't quite there yet, and we're not really sure what exactly is going to take it there, but all of us, I think, are pretty certain that there's going to be something.
Thanks. Anybody else?
So I kind of would repeat what we already said before. I think it answers this question as well. That in the future, technology is driving. I think I kind of agree with Matt. The technology is driving. People are driving the technology, and technology is global. It's the same in Japan as it is elsewhere, and that feeds into regulation. So we interact with 12 regulators in 12 different jurisdictions, and it's very interesting to see how they evolve, because the regulators effectively they all want the same thing. The regulators in the US, the CFSB and JFSA in the US, for example, in Japan, they all want the same thing. So it's interesting to see, as Matt said, when I started, companies, financial technology companies, were still keeping themselves away from regulations, and regulators also were kind of keeping themselves away from those companies. I think now, especially in the West, it's changing super fast. In the UK, both the startups start with getting regulated, and also the regulators have special programs for startups to find their way, how they fit into the regulation. And I was just speaking with the local Financial Services Administration. They are also setting up programs called sandboxing, so that when you do start your financial technology business, you can go to the regulator and figure out what's the right way to fit into the system, because eventually you will have to.
Excellent, thank you. What we saw at the end of 2016 was that there was a slowdown in funding for fintech companies. Investors obviously like certainty, and there is uncertainty. I think particularly in the UK, there was a slowdown in the flows. This now appears to have started moving. Do you guys think there will be any counter or negative effects for funding, or for the possibility of innovative startups to get money from investors?
So in some ways, investors should probably speak about that. As Currency Cloud's recently raised another round of capital, some of which Rakuten very helpfully participated in. Early stage companies are actually not selling into value in the next 24 months. They're selling into value 5 years from now, when we won't know what the regulatory environment will look like, or what the economic environment will look like. So what I see is that the early stage firms, at least in the world that I live in the UK, there's a tremendous amount of innovative activity. There's a lot of small startups, and they're getting funding. I think the concern is the level of company that perhaps the Currency Cloud is, which is a mid-level growth stage company, where I think there's some crunch in terms of what the value of the companies are, and what their funding is. But where a lot of that real gut level innovation happens at the bottom, I think that's still very, very vibrant in the markets that I'm in.
Thanks, Matt.
I'd say kind of generally, there's a bit of an investment cycle within the startup world, and especially within the fintech world, where certain trends tend to catch on and become very popular. I think we're kind of nearing the end of one of those waves, and we're seeing a bit of consolidation. And there's some spaces like, I would say lending, for example, is probably nearer to where people are starting to figure out which business models work and which business models don't work. And the number of competitors might start to narrow a little bit and become more specific, and the winners will really start to emerge. I think that might explain some of the slowdown that you mentioned, Oscar. It is, from a venture capital standpoint, people are still raising a lot of money, and the sector is still very interesting. It is, I think we're all kind of waiting for the next big trends to start to emerge, and we're kind of looking, I think, a lot towards smaller companies that seem to be at the forefront of those trends, and trying to figure out which one of those is going to pull ahead.
Thanks. I don't know if James or Crystal, would you like to add anything to this?
We have raised money almost every year, but we did not raise we actually raised a little bit last year, and I think the cycles are a good analogy. There's so much VC investment now that it almost also has this bear cycles and the bull cycles. I think definitely in the last year there's a bit of a bear cycle, and people who knew that this was coming, they stocked up on capital before that. So I think we kind of see companies raising quite a lot of money, and then they just now have the money. They don't need to raise more, the new ones. And I think the new ones who do need, they can still raise money. There's still activity happening. I don't think it's particularly difficult to raise money. Maybe the valuations for the people raising now aren't as great as they were a year ago.
Maybe more reasonable than a year ago. Great. The next question I had is, and this kind of like relates to China, sort of, a little bit like independently from, again, what we've seen in the US or in the UK. The Chinese have built an amazing ecosystem. We've seen those unicorns that are mostly Chinese. The systems are very much closed loop within China, and it's a bit more difficult, I guess, for foreign companies to be able to enter or compete in this market. And I guess this doesn't only pertain to fintech, but we've seen it in other areas. Is that a good example? Is that a trend? Do we see any potential for an emergence of, I guess, like nationally closed models, if you will?
So I'll just say on China that for the currency cloud, one of our most significant current businesses is financial flows west to east and east to west. There's a massive amount of flows from Chinese merchants selling on Amazon or on e-commerce sites throughout Europe and throughout the US, who then need to move the funds back to China. And there's equivalent massive financial flows from Chinese tourists, from Chinese businesses doing acquisitions like Ant, from Chinese payment service providers moving funds in the opposite direction. So on the one hand, though there may be a move, and I can't speak about what goes on internally in the Chinese economy, to be nationalistic, the amount of global flows moving in each direction are so massive right now that actually internally stifling that looks to me like it becomes difficult because you're so keyed into the global economy, both in terms of export and import.
Thank you.
Sure, yeah, I would agree with that on the payment side. On the lending side, if you're going to lend, depending on what country you're in, there's usually a different set of laws and regulations that's different. Actually, in the US, we even have different laws and regulations by state, let alone by country. So it's pretty specific and it's hard to cross over. Now, having said that, there is a great example of a company in Sweden called Klarna that finances purchases online. So let's say if you go to Rakuten and there's a button that says you can buy your purchase in 26 payments over the next 10 years, over the next 10 months, and that's how you buy. So Klarna started in Sweden and has successfully migrated to Germany and other markets, and they recently entered the US, despite the fact that I think every country they're in has a completely different regulatory regime. So in that way, I would say there are some examples of technology kind of driving the way.
Wonderful, thank you. So I think having said this, we're gonna open it up to the audience. Hopefully we can take some questions for our panelists here. I think the gentleman with the raised hand.
Thank you very much for the presentation. My name is Colin. I'm an MBA student here in Japan with McGill. My question, Matt, you're in kind of traditional venture capitalism, and then James, you're kind of in serving people who haven't had access to financial services very much so far. Blockchain has been a big buzzword recently. How do you think that could affect the venture capital industry and maybe giving people who haven't had access to something like the venture capital industry maybe access in the future? Thank you.
It could affect it a lot, actually. at least I personally don't think I've quite seen the business model that is obviously going to be a success. One of the things that Peter said, and I really believe, is that everything works at scale, or a lot of things work at scale. So with blockchain, if everybody's using Bitcoin for payments, it's going to be, it already will be the next thing. But there doesn't seem to be a good way to get from where we are right now to where everybody's using Bitcoin. Then there's also an argument about how to separate the blockchain from Bitcoin and other things that get a little bit more complex. But I'm confident there will be a business model that will emerge, because even from a regulatory standpoint, people very much want to see that technology implemented. And it's much more advanced than what we're doing right now. But I'm still waiting.
Yeah, and actually also to add on to that point, at least what we've seen as an investor as well, particularly in the fintech space, is that some of these emerging companies tend to create products or services but are not real companies. So it's very difficult sometimes when you have a one-shot type of product to really turn that into a business, when in reality you've just developed some form of an add-on technology like blockchain could be. For other things, the example there would be HTTP for the internet. Basically, as a code, is not necessarily a business, and I think there's a lot of confusion in blockchain in particular. Thanks. Any other questions from the audience? The gentleman here, please.
Thank you very much for your presentation. I also have a question regarding cryptocurrencies. Well, as some of your panelists mentioned that it's still excitement stage and maybe early adopter stage. But once it becomes a majority stage, what would happen? What would be the impact? And for example, for your companies, what is the threat and what you can gain? Or what is the opportunities?
I would say that if the world goes on to Bitcoin, fortunately we don't need Transferwise anymore, then we would have one currency. That would be an amazing outcome. We can all go home. I think adding to the cryptocurrency talk, one interesting thing that would happen if the world moves more towards cryptocurrencies is that we stop relying on centralized infrastructure like payment systems or card networks or even banks. And it would democratize the power in the financial system. That would be, I believe, a great idealistic outcome. When we talk about blockers, what's stopping us getting there, I find one of the trickiest thing online actually isn't so much finance or payments. When we talk about access, it's the identity. So the moment where we solve digital identity that the governments respect, I think all of those technologies become much more realistic, and the way to get there becomes much more visible. I'll give you an example. In India, I just come from Mumbai, they have implemented something called Aadhaar, which is a national biometric ID system that has enrolled 1 billion people onto this. Where you can do electronic KYC, electronic onboarding for all of its people. And it's not, when we talk about unbanked, they realized it wasn't that those people didn't have access to banking. They just didn't have access to digital identity. And once you solve this, a lot of other problems become easier.
Wonderful. I think we have time for one more question from the audience before we wrap it up. I think that there is, sorry, I see a hand right there on the left-hand side. Please go ahead.
Yeah, thank you very much. Saoichan Muller from JR Japan. You mentioned before in your PowerPoint slides the power shifting to Asia and particularly China, and then you also commented on China. And you mentioned the concentration is mainly in lending and payments. I'm just wondering if you can possibly comment on the worsening shadow banking situation in China, and do you all see this as a risk or potential business opportunities? Thank you.
Matt, do you want to take that?
Sure. there's always going to be trouble when there's not a lot of clarity behind what an investment actually is. The Chinese financial system and shadow banking, I think, is I mean, kind of our house view at least, is it's a result of basically the Chinese government capturing a lot of capital within the country and it not having enough places to go. So if you're Chinese, you can invest in real estate or the stock market, and that's about it. That's created a big market for shadow banking, but and we've seen the government in China crack down on it various times. It seems like the government there is actually pretty aware of it and is taking measures, but it's hard to know the magnitude because all of that data is kept private.
Yeah, and I would add to that I think it's a great question, which is specifically at the core of what we were discussing before. Effectively, because it's financial services, because you need to protect consumers, you need to protect lenders as well, there has to be some regulation. The question is how much you put into the system without clamping it or without sort of like reducing the ability to borrow. That's why great companies such as Insect exist, precisely allowing people to borrow. So I guess having said this, we are running out of time, so I'm just going to ask our guests to make some final remarks, each one of you, starting with James, please.
So as you think about what industries will benefit the most or in fintech, and which ones will be negatively impacted by these changes. So I'm going to just speak to lending for a second. In the US, I think the new administration is going to push more lending, and when that happens, through the banks, so that banks are less conservative as they've been over the last 4 years, 5, 6 years. And I think that's going to hit in the areas of mortgages and small business. So I think if you're doing fintech lending in those spaces, there's going to be more competition from banks, and that's going to be hard competition because banks have a much lower cost of capital. I think in the area of trying to serve, I think a question earlier, the underserved populations that are in the cash economy, that's still going to be, in my opinion, very, very far from what banks are going to be able to do and be good at. And so we like the fact that we're focused there. And just to end, I think, look, it's a great time to be an entrepreneur in fintech. All of these changes mean that there's more and more opportunity, and we see tremendous optimism. So hopefully all of you will decide to join us in the fintech revolution. Thank you.
Thanks. Christo, please, very, very quickly.
I wanted to say that every year I come back to Tokyo to visit our Tokyo office. I meet the startups here that are building things in the financial services, and I'm each year more and more impressed. So I'm really glad to see more things being tried out in Tokyo in the financial services, and I hope that you find inspiration to continue on that road. Not all of the companies need to come from Silicon Valley. I'm looking for the next financial service coming from Japan.
Matt?
When you think about financial services, it hasn't really changed a lot in the last 50 years or so. In as much as everybody's parents would probably interact, the way that they interacted with a bank is very similar to the way that we interact with a bank and financial services these days. There's a lot of change that's coming to that. The business model itself is changing, and because of our phones, internet, and a whole host of other technologies, that change is accelerating and going to appear in our lives very soon.
Mike?
Yeah, yesterday I had the honor of judging the startup competition. And what was very impressive of the firms is that almost all of them, and most of them were Japanese startups, were built with some kind of social consciousness in mind. So they weren't just an investment with a return on investment, but they also had a social capital point to them. And I think as we look at fintech going forward, a lot of the whether it's the mobile phone revolution or the user orientation, but that social orientation to whether it's fintech or startups is impressive, and I think that's where you'll see a lot of companies focusing on what they really can do to make individuals' lives better in a lot of very different ways. And yesterday's presentation was very impressive on that basis.
Wonderful. Well, thanks everyone, and we're gonna finish it off with a great round of applause for our speakers. Thanks everyone.